Right now, are there any like companies that you're looking at, or example of companies you're looking at currently that you think are undervalued in today's market that maybe people are sleeping on right now? Are you able to share anything like that with us?
Yeah, one particular asset, and full disclosure, we do have exposure to this as well. And I look at more of the protocol as opposed to the asset that we've looked at for many, many years that I think is undervalued is B&B. B&B
Mm.
associated with the Binance protocol. I think that's a particularly undervalued asset that not enough people understand. And when you really look at B&B from its token economics model, I think it's probably the best token economics model after Bitcoin because the organization takes a percentage of its free cash flow and goes into the market every quarter and acquires B&B and then burns it and destroys it. So they actually reduce the float of the token over time, which basically creates this deflationary mechanism that long term can create a lot of value for the token. And so I actually think that's one to really take a look at and understand because I think it's an undervalued asset where it sits today.
Interesting. I'll have to do some more homework on B&B, it sounds like. In terms of like your general clientele, like who is your typical investor today? Is it family offices, endowments, retail folks, a little bit of everyone, or who do you normally feel like you're serving as clients?
Yeah, so most of our investors tend to be family offices and institutions. So I would say, 95, 97% of our client base falls into the family office category. And I think the reason that
Mm-hmm.
is because these are people who have accumulated success in different ways, and they started to see the opportunity a lot faster than an institution was able to due to their own due diligence mandates and custody and regulatory requirements. So family offices, we got a great foothold with them early on, and that seems to make up the bulk of our investor base today. And now that there's such a shift in policy and regulation, we're starting to see a lot more interest around the world from the larger institutions wanting to enter the space. And I think that's what really restricted a lot of them for many years was that they need the regulations in place to understand the sandbox they're playing in before they just start deploying a ton of capital because it's a risk that most of those bigger institutions or endowments or foundations are willing to take.
Mm-hmm. And I was doing my due diligences before we had you on the show, and I saw something that said that you've talked about the Bitcoin adoption following an S curve. Okay, so how does that play into your investment strategy? Are you timing those inflection points? Are you just buying and waiting, or what's your process like there?
Yeah, so our average holding period for an asset is 1 to 3 years. So with the S curve adoption, for people that may not be familiar with this, and this is big into our investment thesis, is that for a new technology that becomes very innovative and gains mass adoption, generally with S curve adoption, it takes the same amount of time for this new technology to go from 0 to 10% adoption that it takes to go from 10 to 90% adoption. So this has been true of the printing press, the automobile, the internet, mobile computing. And as an example, if it took 8 years to go from 0 to 10% adoption, it probably took around 8 years to go from 10 to 90% adoption. Or if it took 10 years for the first, 0 to 10, it probably took about 10 years for the second 10 to 90%. And that's what we believe is going to happen with Bitcoin that's playing out. So we think that, if you keep following the adoption trend, we're very close to hitting this tipping point where we're going to go from, smaller adoption to a dramatically large adoption very quick. And our thesis is that, when we started the company, is that we thought by around 2030, we would be huge up that adoption curve. Like we would be growing very, very quick. And so we think now, for people that haven't entered the space and are interested in allocating to the blockchain space, this is a really great time to be considering it. And the reason for that is now we have a favorable administration for the cryptocurrency sector. We have both the main regulators, SEC and the CFTC, that have crypto favorable leads. It's just chairmen that are leading the charge and really putting the right guardrails in place in a very conscious and intentional way, which is going to be very helpful for the industry. We have massive institutional on-ramps today that we didn't have years ago, and we have brand new products and services being offered that create a much better consumer and investor protections. And with all those at one, it's just going to create a dramatic accelerance of the adoption rate, in my opinion, between now and 2030. And so this is a great time to be considering getting exposure to the space because we could see some very interesting things happen in the years to come.
Yeah, especially with what you mentioned. We have a pro crypto Bitcoin government in place right now. So that begs the question for me, how big a role does regulation play in your decision making? If Congress dropped a curveball law tomorrow, what goes on inside of your office? Is it still par for the like we're still going on the same track, or would you be trying to adjust quickly? How does that play out for you guys?
I think after what we went through with the last administration and how hostile they were towards the entire cryptocurrency industry, I mean, nothing would surprise me at this point because we've seen a lot of very interesting things happen. But I think we kind of reached
Yeah.
over the obstacle. Now we're at a point where even if something comes out of left field, I mean, anything's possible, but I think we have too much momentum at this point to have anything totally devastating to the industry. But, crazier things have happened, so I say anything's possible. However, I do think we've got a lot of steam behind the industry. We went from basically huge headwinds to massive tailwinds over like just this year, right? Like, if you to think that you would have a president not only buying Bitcoin but endorsing it. I mean, Bitcoin was the first asset I think a president has endorsed in over 50 years. That's a huge deal that people don't really think about. And have a Bitcoin strategic reserve and the early inceptions of that being put in place, along with all the other interesting things that are happening in terms of regulation and institutional on-ramps. I just think it's at a point where, everyone says a new technology is like there's a time when its time has come. And I think that's what we're going to be seeing now. Finally, we've reached this point where the time has come. It's really overcome a lot of the challenging obstacles. And that's just going to open the floodgates for capital and opportunity in the years to come.
Yeah, absolutely. And with those tailwinds you mentioned, it certainly seems like things are trending very much in the right direction despite the recent pullback we've seen. I know you got to get going here, Brian. Before we let you go, though, we like to ask everyone at the end of our show, we're keeping track. By the end of 2025, where do you think Bitcoin is at? This is not any kind of financial advice. We just like hearing it from different experts and professionals in the industry. And whoever gets closest, we're going to send a Roxom Patagonia to. So what do you think, if you had to put a number by the end of this year, where do you think Bitcoin's headed?
So to answer this question, I usually like to refer to the models that we use to help us understand Bitcoin. And we publish these publicly on our website. If you just go to offthechaincapital.com in our chart section, we update these every month. So when we ran the models for this just this month in August, for basic trend line analysis, which basically what you do is you take the historical price of Bitcoin and you map it out on a trend line into the future. That particular model says that Bitcoin, as of this month, should be around $250,000 today. And it has an 88% correlation to the historical price of Bitcoin. So according to that model, Bitcoin, as of today, is very undervalued. Another one that we use is called Metcalfe's law. So Metcalfe's law, you take the number of users in a network. So this can be applied to things like Instagram or Netflix, any network effects type business model. Bitcoin is one of these. And you take the number of users in the network, you square that, and then you multiply it by the transactional value flowing through the network. And this particular model for Metcalfe's law notes that Bitcoin's fair value as of today should be around 173,000, and we know it's trading around 108 to 110. So this model also shows us that Bitcoin is very undervalued. Two other models that we use is, Plan B's stock to flow model. So we use it in dollars, and we also take out dollars and use it in gold, as gold is the unit of account. So from a dollar standpoint, this model says that Bitcoin should be reaching, 5 to 800,000 during this particular cycle, which could be, tremendous upgrowth if this ends up happening. And if you look at Plan B's model, three of the last four times, it actually went 2 standard deviations higher than what the model indicated. So if it went 2 standard deviations higher than the 5 to 800,000 that the model's indicating, that's a significant Bitcoin price. And the gold model for Plan B's models for stock to flow is doing a very similar thing as well. It's showing that Bitcoin should be worth significantly more than where it's sitting at today. And so just taking those into consideration, whether that happens by year end or whether that extends into Q1 of 2026, we have yet to see. But I think people often forget when they're doing analysis on Bitcoin. Look how fast we went from 80 to 90,000 to 124,000. It went up so fast. That's what Bitcoin does, right? If you look historically, most of Bitcoin's performance every year happens in 10 days or less. And if you're not exposed to the space and you miss those 10 days, most of the time you have a negative return. So what this teaches us is this is an asset where you always need to be exposed to it because if you're not, you may miss those 10 days or less each year, which generate all the performance generally. And so that goes to say that, this year we've had some great days of performance, but I would not be surprised if Bitcoin is significantly higher by year end than where it's standing at today.